And we're recording now, I think. Yep, we are. I've got with me today Rick Bedar. Say hi, Rick.
Good day, everybody.
And Sean Sweeney.
Hello, sir.
And what we were going to do today is we were going to talk about what Sean wants to do next with his real estate and business career. Sean, like most entrepreneurs, has had interesting, things happen to him, and
Yeah.
he's been involved with an incredible number of different ideas and concepts and businesses, some of which have worked very well and some of which have not. And Sean, you've heard me say this before, you would not be the first entrepreneur to have a record that's, mixed. Even really amazing entrepreneurs like Steve Jobs, Elon Musk, even Warren Buffett, who's probably the best known investor on the planet, have had some failures. So have I, and I, if you don't mind me saying, Rick's had one or two as well. So that goes with the territory. And the way that entrepreneurs learn is they learn best from actually doing stuff.
Mm-hmm.
Some of it works and some of it doesn't. And we learn from both our successes and our failures, and maybe even learn a little bit more from our failures than our successes. Having said that, Sean, you're now in your 40s, right?
I just in my 50s.
Oh my gosh, and Rick is too, and I'm in my 60s. So the runway gets shorter when you turn 50 and much shorter when you turn 60. So whatever you do next, okay, it's really important that you think it through carefully, that you stick to whatever it is that you decide to do, that you have a business model that your coach here and your advisor at Rick Bedar and you think is going to work, that you focus on it for a long period of time, and it has to be successful, because if the next one isn't successful, you could waste 3 or 4 years of your life. And when you're 30 and you screw up, or you're 40 and you screw up, that's a very different thing than when you're 50 or 60, or for that matter, 70, 80, or 90, and you screw up. And I do have one client, by the way, who's in his 90s now and still doing deals, so there is hope for us. But having said that, let's not wait till Sean is 90 and Bruce would be like 108 or something to make sure that whatever it is next is a success. So we got to think it through carefully. And so, Sean, I wanted to hear from you first, and then Rick second. And not for 20 minutes, but maybe in 2 or 3 minutes, Sean, if you could sum up where you think you want to go next, and then Rick, if you don't mind, in a couple of minutes as well, you could comment on that and add your 2 cents. But first, you, Sean.
Okay, so very simple, Bruce and Rick. Just to give you a full picture, I am full-time employed, so I picked up a sales job to make sure I am have money in the household. And then number 2 is
Sorry to interrupt you. I apologize. Where's the sales job?
So I work for SolarWinds.
And who owns SolarWinds?
It's a publicly traded company under the symbol SWI.
SWI. And what do you do there?
I'm an account manager.
Okay. And how big is your territory?
North America.
Oh, so it's little.
Yeah. So we do have territories. We end up being all over the country, all over North America.
And what does SolarWinds sell? What kind of service or product do they sell?
So I'm responsible for network monitoring sales into the managed services community. So I sell to service providers who provide SMB markets with IT services. We have a software for them. So
SolarWinds is not a solar company.
Correct.
It's a software company.
Correct.
Called SolarWinds.
Correct.
I did that.
You got to be kidding me. All right, you tricked me with that one.
I did.
Yeah, he got me too that way a couple of weeks ago.
Okay, what kind of software are they selling?
But we do all kinds backup but my specialty is in the network monitoring. So monitoring of computer networks for IT service providers. So we allow them to do their jobs more efficiently, more effectively.
Are you also involved with the company SolarWinds? Is it also involved with protecting these networks from hackers?
Yes, of course. Yeah, very much so.
And it's a big company?
Yeah, publicly traded. We have over 3,000 employees.
Wow. And I would imagine you're very good at this, Sean.
So my career originally was in this field from 2000 to 2012. I was director in a software company like this. And so now I've gone back just into the sales side because at 5:30, 6 o'clock, my job's over and I'd be an entrepreneur before and after.
Yeah, it makes sense. And I can tell you that, you know, a job like this, you know, with a predictable, steady income is not the worst thing that ever happened to you.
No, no, no.
And do you mind if I ask, do you have a base salary?
I do, yes, around 60K.
60K is your base. And do you have some incentives on top of that?
Yeah, my total income is probably, I think they have me down at 175.
Is that in US currency or Canadian dollars?
Canadian.
Well, that's great, and congratulations. That's news to me, but good news, I think. And one of the nice things, and I'm sorry, I do want to hear from you, but it's important for me to get my 2 cents in here. One of the great things about a sales job, and I have a sales job too. You know, I work with Century 21 Explorer Realty as a real estate broker, and the brokerage provides services for Bruce Firestone to run his own business. The brokerage basically has very little value, in my opinion, other than it holds my license and takes a little bit of my revenues when I have some. But it allows me to run my own business, you know, the Prof. Bruce real estate business, where I can do pretty much whatever I want within the law, of course.
That's right.
I think being a sales entrepreneur is more of the description I would call it than a sales manager.
Correct.
So let's talk about a sales entrepreneur position. Can I just ask, since we're on it, and I just want to give you my 2 cents on it, as a sales entrepreneur, as opposed to a manager or an account manager, how would that change what you do right now? If you think of yourself as an entrepreneur as opposed to an account manager.
It doesn't change the way I feel or think because it's how I operate anyways. It's my own little business with inside SolarWinds.
Exactly. And you have some kind of an incentive, right? Like maybe.
Yeah, which I don't care, but that's what they want me to do. I got to do more.
Well, exactly. So there's no real upper limit to what money you can make. There's a lot of real estate brokers who don't make very much money, but I have a few friends who are commercial real estate brokers, you know, who make 150, 200, 300, and a couple of them $400,000 or $500,000 a year. So there's really no upper limit.
That's right.
Okay, so now let me shut up now for a couple minutes and finish your thoughts. So on the entrepreneur side, outside of SolarWinds, what are you doing?
So then we have a Sharper Group, which is allowing us right now. The focus is 100% on the vision side. So we have developed in partnership with a company called Neurodynamic Vision, NeuroTracker, Synaptic, a vision center. And I've just partnered and got a space in Amped, which is a hockey development center on Leitrim Road.
Yeah, I know Amped.
Yeah, so I partnered with Andrew Mercer there, and Andrew, I don't know the owner's name, but his name is Andrew as well. So we've rented space inside that area, and we have access to their machines, their equipment, and their players. And so we see that doing very well. The Amped Vision side already has 50 athletes on the NeuroTracker system and growing daily. And that's the one I said, I think within the next 4 to 5 months by Christmas time, if we could get 1,000 athletes on there, we're making 20K, 30K a month US.
Fantastic.
So it's booming. Like, it's starting to take off. It took me 1.5 years to get going, but it's moving. So the idea then, Bruce, was to take from all these SolarWinds, and again, that's a salary position. So I focus, you know, I give them as much as I can every single day. Well, it's myself too. Every single day, I'll work as long as it takes. But at the end of the day, at 50 years, some odd years of age, my goal is to take all this stuff and start moving it into real assets that I can then over time transfer on to my family line and really have stability. Real estate, you can, I think you said it in one of the webinars I heard, you can bang on it, knock on it, it's there, and I can pass it down to people. So my goal is to take all my stuff and move it into real estate over time. And it's probably starting with investors, as per the video you shared yesterday, and then eventually make it my money and go from there. So I hope that makes sense, Bruce.
It certainly does. I like it. And, you know, I think I look at the work you're doing with Amped as a personal business for life.
Mhm.
The work you're doing with solar winds is a cash engine.
Mhm.
All right, so that's good. And then the third part of your sort of tripod is real estate, which is hard assets.
Yep.
All right. So to me, that's a terrific combination where you've got a salaried job, some sort of cash engine that's helping to pay the bills, which is
Mhm.
really important. Sharper Group is your personal business for life, and your real estate interests are, obviously something that will build wealth over the next decade or more. So question for you, Sean, do you have a name for the real estate side of your business?
Yeah, sharper real estate or sharper capital, one or the other.
Well, let's call it Sharper Capital. And do you have a tagline for it?
I do not.
Well, for now, we're going to call it.
Everything I'm saying, I'm trying to put the word "be great" behind everything. So I still have just so you know, and you probably see my email signature, to your health.
Well, for this one, let's just say Sharper Capital. We're sharper.
We're sharper.
All right, but what the hell? I mean, it's just a placeholder. You can change it to anything else you want. But Sharper Capital, we're sharper. I'm thinking of it from a point of view of an investor. I'm investing in Sharper Capital, and it's backed by people who are pretty sharp.
Yes.
Okay. Now, sharp, as you know, has both good connotations and bad connotations.
Yeah.
If you say a lawyer is guilty of sharp practice, it means that's a lawyer that you can't trust.
Yeah.
So I wouldn't use the word sharp in the tagline because that means you're like a shark.
Yeah.
But we're sharper just means that we're smarter than the next guy.
Yeah.
Which I know Rick is really smart.
Yeah.
I have my doubts about you, Sean, but I know Rick's
I put smart people.
So I'm just teasing you, brother. I know you're both very, very astute guys and have a lot of wisdom. So Sharper Capital, with Sharper spelled SHARPR, so it doesn't have an E in it. But the tagline, if you use it, we're sharper, would spell out sharper properly.
Okay.
All right. So we, and would all be lowercase. We, WE''RE, and it would say sharper with an ER.
Okay.
All right. So now, Rick, what's your take on all of this that we've just heard from Sean on?
Sorry, guys, I unmuted myself. Bruce, we had a good conversation about 2 weeks ago. Sort of a semi-plan. What I want my role to be is, the realtor and taking care of the financing. I don't want to be an owner anymore, as you know.
Beg your pardon?
I don't want to be like an owner or an investor anymore. But I mean, I really, really want to work with Sean. I think Sean and I make a good team. If it weren't for COVID right now, I think we'd be renovating Place d'Orleans.
I suspect so too.
So, and we did this pretty quickly, all in all. And I'm here to support, look at ways that how we're going to get the financing. My first step is to make sure that we have him in a position. This is what I want to do with most clients, Bruce, is, we've done his credit check, and we found an issue, and we're dealing with it through lawyers and making sure that he's solid, because if he's going to sell to people, he's got to be viable, or else.
Yeah. Well, as I said to you before, Rick, and to Sean as well, I don't hide from people that the Ottawa Senators went bankrupt in the mid 2000s or early 2000s, and that, I ended up having to completely restart my career. Unfortunately, not from zero. Zero would have been fantastic. From a negative 1.7 million. I owed the CIBC 1.1 million, and Canada Revenue Agency, I think $650,000. So, and banks, as you guys know, and CRA or IRS in the States, they have a nasty habit of wanting to get their money. So So there I was at 54, not at, how old are you? 50 now, Sean?
No, I'm 54 now.
Okay, exactly the same age then than I was. And Rick, I think you're 52, right?
Correct.
Yeah, so you know, I don't hide that from anybody. If they ask, I mean, you could just Google it on the internet, so it's out there. But I'm not ashamed of it. I'm not. You know, our costs, as you guys know, for our hockey team went from a payroll of 6.5 million Canadian dollars in 92, 93 to a decade later, they were $84 million.
Yeah.
Same players, you know, a goal is still one goal. It's not, you know, they score a goal, it's not 10, it's just one. Yeah. And so you're paying your players, you know, not 10 times more, you know, what, almost 15 times more, and the same productivity, right? They play the same number of minutes. And you try that in any other business, you know, like if you ran an airline and all of a sudden you had to pay your employees, you know, 14 or 15 times more than they were being paid last year or a few years ago, you probably aren't going to be in the air very long. So we sank below the waves. And so I don't think we should, any of us should apologize for that, because if we don't have entrepreneurs in Orleans where you live, and Arlington Woods where I live, Sean, where are you living now?
I'm in Orleans. In
Orleans, you know, if we don't have you know, Orleans, as you guys know, I don't have to tell you, you live there. Orleans has long been the ugly stepsister of Canada and Barrhaven and Riverside South. But all of a sudden you have a lot of these fantastic Francophone and Anglophone and Allophone entrepreneurs living in Orleans, running service business, construction businesses, tech businesses, you name it. And Orleans has really come into its own in the last 5 to 10 years. Everybody thought when D&D moved to Canada, that was the end of Orleans. You know, they used to call Orleans CFB Orleans, Canadian Forces Base Orleans, but that didn't happen. It's because of these wonderful entrepreneurs who are in their 20s, 30s, 40s, 50s, 60s. I mean, John Liptak is out there, right, running Oakwood. Mm-hmm. And Oakwood's pretty successful. And, you know, John's not young either. He's in his 60s like me. So I think that, you know, don't apologize, Sean, and don't apologize, Rick, don't apologize, Bruce, for the fact that you've had some successes, but you've also had some failures. So I like this strategy, and I did see one of the emails that you sent me, Sean, that you would like to have $100 million in assets at some point.
Yep.
And to me, that's a great goal. I have one young client, he's not even 30 yet, who's very successful. He's worth tens and tens and tens of millions of dollars, and he's 28. He started his business when he was 18, and I coach him. And when I started to coach him, you know, he had already had a lot of success. And I asked him what his goal was, and his goal was 10 times what yours is. He wants $1 billion in assets.
Nice.
So, you know, and now, mind you, he's 28. So he has a little bit longer runway to achieve that than you do. But still, 100 million in assets is not that far removed. So the next thing I saw in the emails I got from Rick and from you, Sean, was there was discussion about investors. There was discussion about, you know, starting maybe a mortgage investment corporation, possibly a REIT. You know, how do you want to structure? I'll first ask you this, Sean, and then I'll ask Rick. How do you want to structure these investments? You want it to be on individual projects? You've got individual investors, or you want to have a MIC or a REIT?
So great question. My understanding in my not as sharper brain as compared to you two is that my original thinking was that I would like to have individual projects. So buy one, put the investors in there, buy the next one, put the investors in there. Rick had some great ideas around the different opportunities, right? So I'm open to what would work best and where's, like you said at the beginning of the conversation, what can we stick to and go for and build. So I watched your video the other day on remodeling, that concept as well, which I kind of thought that could be a great opportunity to bring cash in that allows me to grow my cash base and expand into what Rick is talking about or something like that. But again, I'll just be quiet for a second. You've heard my thoughts of where I wanted to start.
Well, we'll talk about what the right model is, business model, but right now we're talking about the right structure, okay? So a structure which is a MIC, a mortgage investment corporation, a REIT, which is a real estate investment trust, or individual projects that individual investors can decide, yeah, I'd like to invest in this or this. That's a structure question, and the makeover model or some of the other models, those are business models. They're different.
So I'm in the bucket of one structure, the first one, where I buy individual projects. However, as I said, not opposed to the rest, just don't understand them well enough.
Okay, and so Rick, your comments?
Bruce, before I make a comment, I'd like to ask a question to Sean, because I think there's something that he's sort of not telling you that might be important. So, Sean, tell me the original thing that you came up to me with. Like, you had investors in the States with a certain amount. So, you know what I mean? Because that's important.
Yeah, so I think that's,
you already have access to certain groups, and this is why I went a certain direction.
Yeah. So that's to the first bucket, though. I think we're agreeing, Rick. I just maybe didn't expand far enough. So it's where I was going to go. So I have a couple of investment groups in the U.S. that I'm tied into that I know very well that have money, and then also I was mentioning to Rick that most of my clients on the tennis side are fairly off wealthy, and I've built up trust with them over the last 10 years. Doctors, lawyers, so on and so forth, who I think there's opportunity for me to go and raise capital. I already did without even really trying. I raised $65,000 with kind of 2 calls. And so I like to tap into those markets to go after those projects, right? So that was, again, but I think that ties back to bucket number 1 or structure number 1, where I say, hey.
It could be any one of those 3 structures.
Yeah.
And I like it. I like the term. I wrote that down, bucket of 1.
Yeah.
No, I like that term. I'm going to steal it. Okay, Rick, over to you.
Okay, so when he came to me and he said that, this is where I said, okay, to me, based on what I know, after I looked at and the credit part is not because of a bankruptcy or anything like that. It's just an issue we need to solve, because he'll lose some credibility with it, and it'll be hard to go and. The other thing, Bruce, that I notice is if Bruce Firestone comes to me right now, and this is no offense to you, Sean, if Bruce Firestone comes to me with a real estate idea, I'm more likely to listen to Bruce Firestone than to Sean Sweeney. Is that a fair comment?
Yeah.
Okay.
Well, that's why I'm here as Sean's coach and your friend, Rick, and colleague. I'm here to lend credibility to it. As long as I'm involved, I'll certainly support you guys. There's some people that have asked for my support that don't get it, Rick, because I don't believe in their model, and I think it's a bad idea. Yeah. And as a coach, I always put in my coaching agreements that my clients can fire me on 30 days notice, but I also put in there that I can fire my clients on 30-day notice, just in case. Let's say Sean decides to invest in I don't know, strip clubs in Limoges. That might not be something I would support.
Yeah, there's already 3 of them anyway.
It's just not something I would be interested in a network of those. I'm not saying there's anything wrong. I mean, people have to make a living. I get that. It's just that, I have 3 beautiful daughters, and I wouldn't want them dancing in a club like that. Sure. So, there's certain things that I wouldn't support, but, I'm not worried about that.
Okay, so, but if you just let me finish my thought, the thing is that I'm saying is that if you're trying to go get investors to buy, let's say, a $12 million project, and you have no experience, even though he may have bought some, you're trying to get people to invest money. It's already very hard to do. And if you're doing it and you haven't done any yet, so this is where we have to decide: do we do a small one to get him going? Right. Do we do something like Wendover to get him? You know what I mean? Or
that's a business model question. We're going to get to the business model, right?
Yeah.
What we're dealing with right now is the structure, and we talked about a mortgage investment corp, a real estate investment trust, or the bucket of 1. And that's what I wanted to comment on.
Yeah, I think the MIC comes later once you're established.
Okay. So I get that. All right, fair enough. Now, when it comes to a business model, this is a different discussion, okay, Rick, a different discussion, right? So, I've done a few of these coaching sessions now, like a few thousand, I don't know how many, it's probably 10,000 by now, but I've done thousands of them anyway. So we talk these things through, and it's a little bit of a pain in the butt to go through it, this way, as opposed to just, have a big, mind meld. like Mr.
Yeah.
Spock on Star Trek. So in terms of a business model, there are, you know, a lot of real estate business models. And as you guys know, Rick, you certainly know this, and Sean too, that most real estate investment and business coaches, when they talk about real estate, there's only one model, right? You buy some multi-res, and you know, whenever a rich dad, poor dad the conference happens anywhere in Eastern Canada or Eastern United States, I will get 2 or 3, sometimes as many as 5, 6, or 7 calls in the next month by people who are asking me, "Hey, Croft Bruce, I hear you're good at real estate." And I say, "Oh, thanks for saying that. Yeah, I've done a little bit. And can you find me a 100-unit apartment building for sale that makes $100 per unit per month, clear, free and clear after everything is paid for, property management, mortgages, OPEX, everything is paid for. So I can make $10,000 a month. It has to have no deferred maintenance because I don't want to do any updates. You know, and it also has to be a no money down purchase because I don't have any money. And I just like to buy it for you know, $1 and pay it off over time, however long, you know, 100 years or whatever, and I can make $10,000 a month and retire from my job. What do you think? Great idea, huh? And I'll say to them, did you just attend a Rich Dad Poor Dad conference? And they say, "How did you know?" And I'll say, "Well, I got a few other calls like this." And what I say to them is that it's not that that never happens, okay? But I'm pretty sure that happens less often than winning the lottery. So, and I tell them that. Imagine, you know, a property like that, if it became available, do you think I would call them, Rick? I think I might say, "What? There's a 100-unit apartment building worth, you know, I don't know, 25 million bucks that you're willing to sell me for $1 down and pay you $1 a year for 25 million years. Great. And it makes $10,000 a month after paying all of its bills. It has no deferred maintenance. And oh, they always say too, it's got to have great property management in place because I don't want to do any work." So, you know, these are ridiculous models. There's a young coach, or there was a young coach in Winnipeg, and I've mentioned it to you, Rick, before, but maybe not Sean, who was teaching people how to flip houses. And unfortunately, he has passed away at a very young age of 32. And I asked him, "You're teaching people to flip houses? Everybody I know who flips houses flip until they flop." And he says, yeah, I know. But, you know, I said, "How much are you charging?" He says, "I charge them $61,000 up front for my coaching." I said, 61,000, you know, I charge maybe $850 a month for some young people and $1,500 a month for some others. Almost nothing compared to what he's charging. Oh, he says, "I take their home equity. They have to go get a second mortgage to pay me." So I said to him, to the young man, I said, "How many of these people fail?" He said, 94% of the people who take my coaching practice fail." I said, 94% fail? I wasn't sure I heard him right. He said, yeah. You know, I have a few that, you know, have made some money. But most people who flip houses, they work at it very hard for 6 months or 8 months. And, you know, I know a young couple here in Ottawa that flip houses. And between the two of them, a nice husband and wife team, they make about $15,000 each on every flip, and they do 2 a year. So they're each making about 30 grand, 60,000 as a couple. If they worked at Home Depot selling chainsaws, they would earn that much with a whole lot less stress. And so it's just ridiculous. And everybody else who flips houses flip until they flop. So you've got all of these terrible models out there that if, Sean, you go to you know, a group of investors and say, "Hey, guess what? We're going to flip houses, or we're going to buy no money down 100-unit apartment buildings like the ones I described earlier," they're going to know that that's not realistic. Okay, so we have to find a business model for you, Sean, that you are passionate about, that your gut instinct tells you, yeah, this is probably going to work, and where your head, the analytical part of you, you know, your neocortex is in agreement. So if we can find something where your heart, your head, and your gut are all in alignment, and it's a model that differentiates you from all the idiots out there teaching stuff that doesn't work, then that's probably going to have a hell of a lot more appeal to investors than the two models that I described. A third model that is very popular now, especially in the United States, is called wholesaling. And that's where people tie up properties and they flip them even before they close on them.
Yeah.
Right. And some of my coaching clients who paid $20,000 and sometimes as much as $30,000 US to learn how to be a wholesaler in real estate, I think 100% of those are failing. And if it's not 100%, it's 99%. I mean, that's just a guess on my part. But I can't tell you the number of people I'm coaching now who've done Rich Dad Poor Dad, courses, and who've done wholesaling courses, who have just lost an incredible amount of money on coaching and teaching. So when I say to Rick, Sean, when we're just talking off the record, that I'm probably the best real estate coach in the world today, I also add to that means I'm the tallest midget. and because I'm comparing myself to people who are, unfortunately, maybe that's very politically incorrect, but I'm comparing myself to people who are 2 to 3 feet tall. So it's easy to be the tallest person in the room.
Trying to teach him to say you're the greatest hockey player in all of Ecuador, but he hasn't gotten that.
Yeah, I mean, I might be if I moved to Ecuador. I played pretty good left D when I was at McGill, but and that's a long time ago. So I'm going to steal that too. I'm the best hockey player in Ecuador. That's probably a more politically correct thing than saying the tallest midget, right? So if I offended anybody, I apologize. But so Sean, what we need to do is find a business model for you, like I said, that you're passionate about, that's probably going to work, and your instincts are in alignment on that. And I'm just going to ask, I mean, you mentioned the makeover model. Was there anything else that you've heard me talk about or you've seen that is of particular interest to you?
Well, listen, at the end of the day, yes, I do like multi family, right?
You and a million other people.
Yeah, no, absolutely.
But Bruce, if I can just add, one of the things that I showed him is new stuff that's being built there, because there's a couple of builders. I believe in that because that example, because it's still out there in Wendover, it's new stuff. It can be a condo unit, so you can sell some units to remake your money that you deposit. There's a lot of ways that you can really excite your investors, in my opinion, with stuff like that.
I hear you. So is there a geography associated with this?
I'd like to be close to home, especially on the early ones, right? As I learn.
Okay.
Now, close to home. Have car, will travel if it's a good deal.
Well, you certainly will do more traveling than I will. I know Rick does that too. All right. So Rick likes the newer stuff. Sean likes the multi-res, and the geography is close to home. So far, I find that kind of an interesting model in the sense that there probably are 10, 15, 20, 30 million people in North America alone who are also interested in that model. And the issue that I have with the model is that there's a lot of competition. And so in some cases, Rick and Sean, there's not a lot of competition, but that's because the cap rates are really low. So is there a secret sauce to this that I'm unaware of?
Are you asking?
Yeah.
My answer would be no. But maybe there's something.
Because if you don't, just hear me out. If you, Rick, and you, Sean, don't bring any special secret sauce to it, anything that gives you an edge, makes you sharper, then I don't think this model will work. So let's take, for example, the Wendover property that Rick, you like. Do you remember what the cap rate is on the purchase?
I think we came out with 5.2, something like that.
Yeah. Okay. And would you consider that, Rick, acceptable?
Well, I mean, considering that we want 6, yeah, because I would.
Okay. And Sean, you too?
Potentially.
So Rick, what's the secret sauce?
It's interesting that you bring that up, because there's some, I mean, obviously you've talked about doing some unique stuff in projects, doing some unique, I don't want to call it makeovers, but I think you call it packages, or like, I know you talk about tech packages, but I just had an idea run through my head here. And so through listings that I've seen, like some of the downtown listings, like that have retail underneath that are going bye-bye, but apartments above, there may be a unique opportunity in some of those. And again, I don't want to dwell too hard. I just want to get your thought, where a sharper vision could go in with an optometrist and take the downstairs section, and we have that would be unique. And I'm not saying that's it. It just popped in my head, so I thought I'd share it.
So what would you populate the retail with?
The sharper vision and the optometrist, put them together. Because we're still going to see a ton of retail go bye-bye.
Yeah, I agree with that. I mean, if you ask me whether or not I wanted to own and run a dress shop, I'd rather hang myself for about 24 hours before I would ever agree to that. It would be a terrible idea. You know, I mean, how about running a shoe store when you can go on Zappos.com and get an unlimited selection of sizes and shapes and colors, and it's delivered to your door like by Amazon Prime in like 2 hours.
Yeah.
I mean, it's just, there's just no future in my mind for you know, the average, you know, dress shop or shoe store.
And I believe we weren't far off with the idea with Plaster Orleans, gentlemen.
Oh God, no, I mean, that, you know, until we've talked about this before, the three of us, until the internet can drill your teeth, you know, and fix a cavity in your head, you're going to go see a dentist. And you know, and if you need some physiotherapy, you're going to go see a physiotherapist. And if you need to be trained up as an elite athlete, you're going to go to one of those sharper places and get some training. I mean, you can do a certain amount, like, you know, my wife likes to go to yoga classes, and she can put yoga on a screen like this and do yoga, but for her it's not the same as going out, and the yoga teacher comes to you and says, Don, if you hold the position a little bit differently, you'll get a better stretch, and try this, and there's, you know, there's also the encouragement that you get from being in a gym or a yoga studio that you don't get from being at home on your own. I do yoga too at home, but my yoga practice is so mediocre as to be indescribably bad. But she's been doing yoga since she was a teenager, and the ability to go to a class still means something. So Rick, let's go back to the Wendover example. So one of the secret sauces that, you know, you guys have probably heard it from me more than you ever wanted to, is the animation idea. And Sean mentioned one a moment ago, which was the tech package. If you guys bought the Wendover properties, what kind of an animation would you do to bring it from like a 5.2%? And just before you answer that question, Rick, one of the things that I set out as a minimum goal is a cap rate of 6%, whether you live in Ottawa or Toronto or Vancouver, Los Angeles, any of these desirable cities. But in smaller centers like Wendover, I am looking for an even higher cap rate than 6%. I prefer, you know, 7, 8, 9, 10, or 11%. And the reason for that is in these smaller centers, real estate appreciation is not going to be as strong as you might get in LA or Toronto or Vancouver or even Ottawa for that matter. So you have to make up for that with a higher cap rate. So when Wendover, being a very small town, almost really a village, you know, a 5.2% cap rate, you know, is probably too low. So how would you get that from 5.2% to something larger, Rick?
I'm just banking on, well, I would do something more interesting for cap rates. I would probably look at storage. for the tenants where we can, but yeah, you're right. There is a limit that I can't say I'll give you tickets to the theater and stuff like that. However, you know, we have to keep in mind that like everything else, even 5 years ago, if I was in Limoges, my rent was $350. Today it's $650. And with COVID changing everything and people working from home, they're not going to want to be downtown. Rockland is going to, it can only grow at a certain rate. This is 10 minutes from Rockland. The places like Limoges will start getting bigger because they're right on the side of the highway, and so to me, they're solid investments because you know, that's your base, your 6-1 there. That's the one that you start off with. That's the one. And I'm not talking about, the only reason I used that one because it's been around a while. So it's right now there's a lot of buildings that you start looking at them, they're gone the next night. So with the Limoges one, it's something that we can analyze, do a case study, and decide. And if it ends up being great, fine. If not, we're able to build our model around something that exists.
Listen, I'm not saying no to anything here. Like, I'm here as a coach and as a facilitator to get to hopefully the right solution. So I'm not trying to put the kibosh on anything. Yeah. So there are some things that you guys need to know. I think I sent to you, Rick, that voiceover video I did, I think on Saturday or Sunday, on pitch anything. I don't think I sent that to Sean.
No.
So Rick, can you send the link? Can you look on your email now? So what I did was I created. Thank you. I created a voiceover video for the students I'm teaching in my Pivot class. I had about 71 students sign up, you know, for Pivot. It's my course where I'm teaching people to become entrepreneurs, and I literally thought of it on Good Friday, you know, in April, and I launched it like 4 or 5 days later, just because I woke up on the Easter long weekend, and I thought, you know, I think there's 8 million Canadians on the CERB benefit, the Canadian Emergency Response Benefit, and 40 million Americans are unemployed. And I said, damn it, I've taught entrepreneurship at Carleton University, at the University of Ottawa, and other places, and I can make a difference for at least a few people. So I just put it out there, and it wasn't very expensive. I think it was $100 a month. Yeah. And you know, some people signed up. And one of the things I do is, if I think there's something worthwhile that they should know, if I can't teach it in class because there's only 3 months of classes, I do these voiceover videos on it. And one of the things that I did was I did a book review of a book titled "Pitch Anything" by Oren Klaff. It's not a new book; it was out in 2011. But one of the things I really liked about the book is Oren says, if you're going to pitch something to investors or to anyone, you have to appeal, and you're a sales guy, you have to appeal not to the neocortex, which is the front part of our brain, or the midbrain, which is the social part of our brain, but to the oldest part of our brain, which is like at the base of your neck, called the crocodile brain or the reptilian brain. Yeah. It's a very old brain. Yeah. And the old brain that controls most human beings is the croc brain, is a very simple brain, and it's easily frightened. Yeah. It likes simple. It likes new. It likes exciting. It likes unique. So if I went to a group of investors, if we had a group of investors on a webinar with us, and I said, hey, we've got a great idea. We're going to buy a bunch of apartments and wait 30 years for the rents to go up, and then we're going to make some money. That's really not a very interesting pitch to the croc brain. And Oren is right. You have, you know, I've been saying this for years, you have to, you know, have 1 or 2 or 3 really strong points, leave behinds, that appeal to the croc brain. And if it's too complicated a pitch, if it's full of data and graphs and charts, you lose the audience after a very short period of time, probably less than 5 minutes, and you don't get any investment money. So I'm not saying that you shouldn't go out and buy the Wendover properties, and that would be your first venture. But what we would have to do is we'd have to make sure that the pitch that we give investors is really exciting. It's kind of unique. It excites the possibilities for gain. And there's some things that you could do to make the Wendover properties more interesting. And the ones that I'm thinking of are very simple, one of which you've already mentioned. As tenants turn over, we're going to add tech packages. And the other thing that Rick mentioned, which he's right, is we're going to have storage revenues. People have too much stuff. Everybody has way too much stuff. Every time I see somebody going into Target, I don't think Target exists anymore, but every time I see somebody going into a shopping mall and coming out with, stuff, I just see another trip to the dump 5 years in the future for them. I mean, most of the stuff people are buying is just crap, and it ends up in the dump. If you walk around your neighborhood on garbage day, you'll see an amazing array of stuff that people have bought. Plastic tables that are busted, and lamps that are busted, and all this the crap stuff that people are buying that just end up in the dump. And so anyway, so I think we all have too much stuff, so I think you could add storage and tech packages. That would be useful. The other thing,
thoughts on a community garden?
I like that idea too. Nothing wrong with that idea. But the other, I'm talking about things that add revenue. And the other thing that I think, there are a couple things that you might be able to add as well. I'm not sure about this, but I suspect you might be able to. And that is workshops. A lot of my clients now who are developers and who are investors who have big buildings are they're ripping out their parking garages because a lot of people my age and older, and even some young people, have fewer cars. Certainly if they live downtown Toronto or New York City, they're probably not going to have a car. My daughter Jessica lived downtown for a number of years. She's in her 20s. And I asked her to do a survey of her friends who were all in their 20s, and not 20 or 21. They were 25, 26, 27, 28, 29. And she did a survey for me. She talked to 32 of her friends who also live downtown. Out of 32 people she talked to, 2 had cars and 30 did not. And if I were to take you to, I own a condo on Ambleside. If I were to take you into the underground garage there, which is multiple levels, you'll see that the underground garage is, maybe it's half full, but I don't think so. So what a lot of my investors are doing is, if they have underground parking, is they're, with permission from the city or the town, is they're converting those to storage, which Rick mentioned, and workshops, because everybody has some kind of a gig. And you can rent those workshops for, typically anywhere from $650 to $950 a month. And what could you rent a parking space for? Rick, what would you get for a parking space per month?
Not in Wendover, nothing, man.
Probably not nothing. But for a workshop, you probably get $650 a month.
Yeah.
And these workshops are not big, Sean. They're typically the size of a parking space, 10 by 20. So 200 square feet to a big one would be 400 square feet. So one that's 200 square feet would probably be $550 a month, and one that was double that would probably be, $850 a month or $900 a month. So those are real animations. The other thing that you guys wouldn't know, because that's not your business, it's mine, is if you were going to make a commitment to a small town like Wendover, part of your secret sauce would be to buy the town.
Isn't there
You ever see that show on CBC? You ever see that show on CBC? It'll sound wrong, but it's called Schitt's Creek.
Schitt's Creek, yeah.
But it's not spelled the way it sounds, right?
Yeah.
I think it's SCHITTS or something like that.
Yeah.
It's a very good show. Eugene Levy and his son Dan wrote it, and you can see it all around the world. People love it in Europe. People love it in the United States, in Australia, in the United Kingdom. It's kind of funny. But if you were going to make a commitment to Wendover, and buy that property, then you might buy the whole town. I'm kidding about that,
Yeah.
but my friend Carolyn Butts, you know Nick Cripps's aunt, I think,
Okay.
is Carolyn Butts,
Okay.
right? Yeah, and she and her partner, her life partner and business partner, Hans Honegger, went to a tiny town of 7,500 people called Tamworth. Okay, did I ever send you that, Rick?
No, I don't think so.
So after this call is over, I will send both you and Sean.
Oh, Tamwood?
Hmm?
Tamwood was it Tam?
Tamworth.
Township in Ontario, small community, Stones.
Well, it's a very, very small town, but I think I have it here somewhere if I could find it. I think you'd really enjoy the story.
While you're looking for that, did you see, Sean, that I put 2 links in the chat?
Oh, yeah. Okay. I'll
So
grab it.
one of them is I also sent you the email for that one. Was the one that says here's what I did. That's the video that Bruce was talking about.
Okay.
The other one is Simon, because Bruce was talking about the inner cortex, and I really like people to read that TED talk of his. Simon, I can never pronounce his second name, Coach.
Simon Sinek.
Right?
Simon Sinek.
Yeah, him. That's his TED talk.
So let me share with you guys my screen for a moment. So this is Carolyn here, and that's Pam Cripps's sister.
I didn't know that.
So this is Nick's aunt, Nick Cripps. You know, remember Nick, right? Sean, you remember Nick?
Yeah, of course.
So this is his aunt. Sorry, it's very tiny on your screen, but this is Carolyn, and this is her life partner and business partner, Hans Honegger.
Okay.
And so they went to a tiny town called Tamworth, and what they did was they started to buy up the town.
Okay.
Her latest acquisition, their latest acquisition, is this garage. You can see it used to be like you could get a lube and in service bays here. So it's an old garage. My recollection is that garage is 20,000 square feet. What do you think they paid for it?
In a small town, 20,000 square feet.
20 grand, 30 grand.
Oh my God, Rick, you get the prize. Hans and Carolyn bought it for $25,000. So one of the things I was going to ask you to do, Rick, if we are in fact going to go after those Wendover properties, is A, is there any space on the property to add some workshops, or B, is there an old industrial building in Wendover that's virtually derelict like this, that we could buy together with this other project? So the one way to raise the cap rate, Sean and Rick, is you're probably limited what you can do with these buildings in Wendover because they've been built, they weren't particularly well designed from what I can tell, from my point of view. I'm talking about from an animator's point of view.
Yeah.
So we could add tech packages. Maybe there's a little room for storage, or maybe we can find room for a couple of workshops, and we could do some of the other things that we just talked about. That's great. But what if we were to bundle it? Okay, so we create a package in Wendover where we've got this. And what were they asking for these buildings in Wendover? What was the total asking price, Rick? Do you remember?
6.6 million.
So what if we had a $6 million purchase here and a $25,000 purchase here? Okay. No, so I know you guys think I'm kind of crazy. Well, and you wouldn't.
I'm actually kind of liking it.
You wouldn't be the first to say that. So we bought, but it has to be fairly close. It can't be 100 miles away. You know, it has to be within the town of Wendover, or very, very close. So we could then rent an apartment and a micro workshop, which is not very far away. And if we could buy something like what Carolyn and Hans did, and then, so let me just finish what they did in Tamworth, okay?
Yeah.
So what they did was They bought this place, and Hans is, I think, not only a good worker, you know, he's very good with his hands. And Carolyn, by the way, is not afraid. You can see she's holding a paint roller. I don't know if you can see it on the screen because it's kind of tiny,
Yeah.
but she's not afraid of getting in there and painting stuff. And Hans is, I think, also an architect. So, you know, I could have that wrong, but I think he is. So he's an architect and handyman, and she is a handy person. And they're not afraid of, you know, rolling up their sleeves and putting some SE, sweat equity, into it. And what they did was they bought a number of buildings in Tamworth, houses that they converted to Airbnb. And what made them different was, who the hell wants to have an Airbnb in Tamworth? It's not like you're going to see the Louvre in Paris, right?
Yeah.
I mean, there's no museums there of any sort. I don't think it's not like the Great White Way where you can see fabulous plays in Manhattan. You know, it's not Times Square. There's no reason why you would ever want to stay in an Airbnb in Tamworth. But just like quote unquote Schitt's Creek, what Carolyn and Hans did was they have these very inexpensive houses that they were able to renovate. Then they had this garage that they were able to renovate and turn into workshops. And what they did was they put on Airbnb, come to Tamworth. We're 2 hours from Toronto. We're 2 or 3 hours from Ottawa. We're 2 or 3 hours, we're 4 hours from Montreal. We're a few hours from New York City. Come to Tamworth and rent a nice suite and a workshop where you and a group can make your next great invention. You can have, you know, meetings and brainstorming sessions. If you're an artist or a sculptor, a writer, a novelist. And what happened was they priced it very low, but not so low that it looked like it was going to be a place where you, if you're a young woman, would get raped. You know, pricing does send signals. If you price it too low, people think there's something wrong with it. And certainly the female half of the species will not go there because they will think it's unsafe. Trust me on that. So your pricing is very important. It sends a signal. But they priced it instead of being very expensive. And guess what happened? Novelists, inventors, writers, people like us who wanted to, you know, have a sort of a getaway which wasn't going to break the bank. They started renting these places in Tamworth. And they would rent them for a month at a time, 3 months at a time. You know, maybe you want to just get away and clear your head. You see how brilliant their strategy was? And this is what I call entire town animation. So your secret sauce, if you were going to do this, would be to pitch investors, hey, we're going to buy the town of Wendover. And we're going to do what Carolyn and Hans says. I'm not saying you do the Airbnb thing. I'm not saying that's the right model here. But you're going to bring the entire town up. And some of that, Carolyn and Hans, by the way, will do consulting and coaching in Tamworth, where people around them will say, geez, you know, I lost my job in the mill. Well, what do I do? Can you give me some coaching? So they're very generous with their ideas, their concepts. And they're bringing the entire town up. And guess what? When you help your neighbors, you know, improve their properties, make some more money, become a little bit more successful, guess what happens to your property values? They go up. Exactly. All boats are rising. Are you seeing what I'm getting at? Mm-hmm. So if we could find, if you wanted to put in an offer on this, and you found like virtually a falling down, I love those falling down buildings, like what Carolyn and Hans did, and we did the tiny workshop model, and we could bundle it together. And some of your units in Wendover, as they become vacant, you could, if you wanted to do, you could do the Tamworth model there. So you would, the way to get the cap rate up, Rick, is some of those units will not be rented the way they are now. They'll be rented on Airbnb, because Airbnb is going to come back. People don't think so, but it will. But it wouldn't be the 3-day rental. Like Carolyn and Hans have no interest in becoming hoteliers. Do you sort of see the difference? Mm-hmm. It's the difference between being a hotel operator and being in the medium-term rental market. So,
do we have time to elaborate elaborate on that a bit more? Like if I show you something right now that you could still
Can
share?
you just let me finish? I apologize, Rick. You just keep that thought in your head for one.
Yeah.
So there's the STR market, Sean, the
What's
STR.
that? STR?
STR stands for short-term rental.
Thank you. Sorry.
Then there's the MTR, which stands for medium-term rental. And then there's the LTR model, which is the long-term rental. Those are really the basic three models.
Yeah.
And I have no interest in, nor would I recommend you get into the STR market. That is a huge amount of work. You got, every time somebody leaves, you got to go clean the damn thing.
Yeah.
You know, and these days with COVID-19, you don't just clean it, you got to deep clean it.
Yeah.
I mean, your cleaners are going to be there. I know because some of my friends are running these things. Your cleaner, instead of being in and out in 2 hours, is spending 6 or 7 hours doing the deep cleaning. And you can't offer your short-term rental without that. You cannot.
Yeah.
People will get sick. And then
Not interested anyways.
It's a terrible model. I hate that. So we would take that out. And everybody who's looking at buying the Wendover property is looking at the same thing. That's why it's still for sale. It's relatively expensive. It's got a relatively low cap rate. And it's a very boring market. It's long-term rental, mostly seniors. So what you would do is you would do
Perfect for Sharper Group.
you would do the Tamworth model, but you would do it with medium-term rentals, which are 1 month and 1 month, 90 days, and 180 days. So, and that model I like because it is more work than the long-term rental market, but that's the one way you could get your cap rate up. And if you offered, a workshop like we've been talking about, and these workshops are tiny, 200 square feet, 400 square feet, 300 square feet, stuff like that. You offer that together with some of your units where people could go and they could crash, they could have a group together. They could have meetings in their own little meetup area. They could create stuff. You have whiteboards in there, like Carolyn and Hans don't have the money to put in like the fanciest of the fancy stuff that you get in the big hotels, right? All the large screens that are huge and all the tech. They just have a bunch of goddamn whiteboards, which are cheap.
Yeah.
And cheerful. And for myself, I prefer, you can see right behind me, I've got a whiteboard here. It's a glass whiteboard.
Yeah.
And, Rick, you've been in my office, I think.
Yes, sir.
It looks very nice. And we when I could have visitors, we would, sketch all over it. Then we just take a picture of it with our smartphone.
Yeah.
And we've got a record
of it. Call it a smart board?
I call it a smart board because smart people write on it, and the smart people with smartphones take pictures of it, and that's it. So it can be a very low tech thing, but it could be. And so if we had some of your units in the medium-term rental market, and we had a project that we were able to buy very cheaply and renovate, properly, we might have as a bundle a cap rate that approaches 9 or 10 or 11%. Because on the building that you see here that Hans and Carolyn own, this garage, their cap rate, I suspect, I don't know this for a fact, but I suspect their cap rate it could be as high as 20%. It wouldn't surprise me if it was 24%. It certainly won't be less than 14 or 15%. So what we then have is we have something very sexy. We're going to help the whole town, and we're going to make significant investments. Now, this is a model that's repeatable because Rick is right, Sean. There are any number of small communities like Wendover where you could, around the country. And so, this is a model where you could demonstrate that this works in Wendover, and then you could say, to hell with it, as long as you had the right infrastructure in place, you could have 30 of these, or you could have 100 of these. Mm-hmm. This is not hard to do. Do you understand the model?
Yeah, very well.
Okay, Rick, over to you. Oh, Rick, you have to unmute yourself, sorry.
My dog was barking. So Bruce, I just want to share a link and then you can keep sharing your screen. It's just to elaborate very quickly on what you're doing, what you're saying right now.
Do you want to share your screen?
No, I think I'd rather you do it because you'll.
Okay, well, could you send me something?
I just sent you a link that I'd like you to, it's Google Maps of the area.
Okay, hang on a second. I'll just grab that. Oops, sorry. I apologize, Rick. I'm just working on this. Give me 1 second. All right, I got it. Oh, shoot.
It's interesting when you said seniors, Bruce. One of the biggest markets for us with sharper vision is the senior market and the cognitive tools that we have to keep them sharp.
That's a great idea.
That's what I liked about what your first comment there when you said, you know, you build something on what I think Bruce calls them stackables, and you have your little thing in the bottom, but your community can go straight in.
Right down, yeah, straight down to the bottom.
They're there. You know how much that this is going to be huge, and this is something that we're looking at my blue, Bruce, eventually that I'll talk to you about. So,
Hang a second. All right, so I'm just going to share this with you guys. All right, so I just managed to. So what did you want to look at?
so I just want to show you. So you see it where it's written Wendover Postal Outlet.
Yeah.
That's actually the location right there. This is no, towards your right. Yeah, right there. That Ovana Street. Okay.
Yeah.
So those 4 buildings or 5 buildings, that's Ovana.
Yeah, I know that.
Okay. So if you go towards the river. So this is another little bonus. So all of these little places like Marché aux Places, and you know, they're for sale all the time almost. So we could find easily a building like you were saying. But I was also thinking, if you go to look at all the docks that people have here. So if we go to the city, and this is the city thing, and we invest in there for docks, we could have our people maybe put their some boats there that could attract, you know. So again, you're investing in the community.
I really like that, Rick.
Build a marina?
Well, not necessarily a marina because that's a lot of money, but I mean, if you go there, this is the actual community dock to get into the river. And
Yeah. Look, can you see it here,
sky's the
Sean?
limit. You could have fishing tournaments.
That's a public facility.
Yeah.
So
they did this in where was I there?
I think you're on the right track here. What you would have, Rick, is you would have, you know, what people really like these days is kayaking.
It's true.
And imagine if you had as your main attraction, you know, the medium-term rental, some of those units that are being rented in the long-term rental market, when they become vacant, you put them into the medium-term rental market. They're furnished units, right? You understand that, Sean?
Mm-hmm.
So they're furnished units, and people can stay for a month or 3 months. And with did they do ice fishing here as well?
Oh my God, Bruce! Unbelievable ice fishing there.
Yeah. So I have a client in Kemptville, Ontario, Sean, who offers ice fishing in that area, and it's the weirdest thing you've ever seen. He has people from Korea, from Germany, you know, from the United Kingdom, from China, who think that Canadians live in igloos, and they come from all over the world, and they go, and he has beautiful ice fishing huts, and they can go in there. If I were to show these things to them, it's like having a hotel on ice, and you know, there's 6 or 8 holes. It looks like Navy ships where you plop in a hole, but those are of course holes that drill through the ice, and they open them up with a hatch, and drop down your. And he has a local outfitter who goes and he shows you how to bait your hook, because some of these people have no idea what they're doing, how to catch fish, how to fry them, how to debone them, mix them up with some veggies and onions. They have unlimited amount of alcohol that he doesn't provide. They have to provide themselves, because there's a liability if you provide alcohol. But people will go in there. They'll go in there on a Thursday, and they won't come out until the Monday. These are Koreans and Germans and people from the United Kingdom. They pay an incredible amount of money. Yeah. And he said, Bruce, you know the most beautiful thing about ice fishing huts? I said, no, I don't. And he said, there's no rent to pay.
Yeah, you drop them on the ice.
Haul them out on the ice. He said the only thing you have to remember is haul them off the ice before the ice breaks up. Otherwise, you lose 1 or 2 of them. They're pretty expensive. Yeah. So it's just a hoot. So you could have ice fishing in the winter. You could have kayaking in the summer, and you could appeal to people. Because Wendover, how long does it take to get to Wendover from your house, Rick? Not that long.
No, it's, I'm going to say 35 minutes. It's 5 minutes past Rockland.
Yeah, I don't even think it's 35 minutes. I'm going to prove it to you. All
Yeah,
right.
it used to take me 30 minutes to get from Rockland to downtown.
Yeah. So hang on a second. I'm going to just prove it to Rick. Okay. So Rick, give me your address again.
896 Balzac Lane.
Oh yeah, 896 Balzac Lane, Orleans. So let's see what Google says. Okay, Rick wasn't that far off. 32 minutes.
Yeah.
All right. So I think that's great. But I really like this model better than just buying a building and more of the same. And 30 years from now, it's producing a 7% cap rate instead of a 5.2% cap rate.
Oh, and Bruce, by the way, like it could take me up to 55 to an hour to get to your place, which 30
Oh,
minutes.
no.
I'm
Don't
saying?
get me
So,
wrong.
yeah.
If it's 30 minutes from Orleans, right? And you know, I spent 5 minutes earlier in this conversation saying what a great, you know, community Orleans has become. It wasn't really that dynamic 20 years ago, but it sure as heck is today.
No, what I meant is that, you know, it takes me to go to Ottawa, it takes me way longer than it does.
Way longer. Oh, absolutely. But what I'm saying is that you would in Wendover, you draw people from Montreal.
Yeah.
And of course, you draw people from Orleans, and you draw people from Barhaven to maybe not Canada. You know, it's a bit far. You know, if I'm in Canada, I might go to Tamworth. But from the French parts of Ottawa and the French parts of Montreal, which is most of Montreal now, I think probably 60 or 70%, that's a few million people. You don't need a few million to come to Wendover.
One last note on this, Bruce, and I'll let you go. So at the end of Wendover, there's a fort that it leads the Ottawa River into the Nation River. And right there,
wow.
André Lalonde Marine, which is the biggest in Ontario,
Yeah.
he's right there.
Yeah.
So we could partner up with this guy
Yeah.
for the boats, for the everything. So there's good potential there.
So what I would like you guys to answer is another question for me. And I don't know the answer to this question, but I think both of you have seen the video I did with Dave Dubois.
Mm-hmm.
Dave Dubois is based in BC, and in my opinion, did a fantastic job as the ROI group lecture. The last one we did, I'm not doing one in August, I'm taking a break. But he did a great job on how to find investors, and both of you have seen that, right?
Yep.
And you know, I know because some of my clients have taken courses with him. I don't know if you've signed up for that. He's doing an 8-hour course on July 25th. Sean?
I'm signed up already.
Did you sign up, Rick?
No, because I was supposed to go to the one this Saturday, but no, I was hoping Sean would go.
Well, Sean is going.
Yeah,
but
and I'll just copy off of him because 8 hours I just can't.
No, I understand. I understand you're busy. And I got permission from Dave to join the group, but I can't spend the entire day on it. I have other things I have planned for that day. But he did give me permission to drop in, so I'm looking forward to it. But what I'd like you to do, Sean, is take really detailed notes. Mm-hmm. And if you don't mind typing them up, or you can maybe just take notes, you type them as you are watching.
I have to type them, yeah.
Yeah, so type them. I'm sure you're faster than I am at that. And give them to Rick and I after the day is over. The other thing is, Dave and I have a difference of opinion on something, and I'm not sure I'm right. Usually I think I'm right. You know, I'm a Mr. Know-it-all. You know, even it bugs even me. You know, my personality is a little bit like Buddy on tinfoil, Sean. And so Dave and I have a difference of opinion. I think my opinion is that you tie up a property first and then you present that to investors. His view is strongly opposed to that. He says, no, you need the money first and then go get the building. And his rationale for that is people line up behind you, Sean, and behind you, Rick, or for that matter, behind me, because they believe in us and they don't really care what the project is. But my experience is they do care about the project. And if I've gone to people, at least in my experience, if I go to people and say, hey, listen, I'm a really smart real estate investor. I want a few $1 million from you. And don't worry, I'll go get something great.
Yeah.
They go, well, when you find something, Bruce, come back. We're interested. We like you. you've got some really neat ideas, but you know, I'm not investing. What did you call it again? The one bucket of one. Yeah, what's the one? But you're going to do 8 hours of training with Dave, and he is very strongly opposed to that. He says, you know, you go out and you get the money first. So I'm asking first you, Sean, and then Rick. Sean, you first. Who's right?
So I'm going to give you my opinion. I think by tying down the building, you attract people to the project because they believe you're committed.
Well, for example, would I have been able to raise $485 million for the idea of bringing a hockey franchise, buying a hockey franchise expansion? No, even more generic than that. I'm interested in buying a sports franchise in a city somewhere.
Yeah.
And I would like $500 million, by the way. Anybody? Put up your hand, anybody?
Yeah.
Nobody would be too excited about that. I'm going to bring back the Ottawa Senators that haven't played a game since 1933. And we're going to have a fabulous building, and we're going to make a shit ton of money on 600 acres of land. We only need 100 acres for the Palladium, and the rest we're going to drive up the value, sell it, make a fortune.
Yeah.
Well, to me, that's a hell of a lot more exciting than I'd like to buy a sports franchise somewhere and put it in a new building somewhere.
Yeah.
That's just me talking. So I think you agree with me then, Sean.
I believe that having the building locked down attracts the investors.
I do think so too.
Dave obviously is doing well, so.
No, Dave might be right. I could be wrong, but my experience tells me otherwise. Rick, your turn.
Vehemently disagree with Dubo.
Yeah.
You do it? Wow, I'm surprised.
In fact, when I was done the course, Sean, do you remember I sent you an email? And I said, this guy does the contrary of what I would do by getting the money first. It's completely ridiculous in my opinion. And to the point where it sort of turned me off the guy. Because to me, it's the classic online guru. That's as long as you keep taking his courses, he you're not gonna succeed, but he succeeds. I completely disagree that I can go into a room and tell people, hey, exactly what Bruce just said. You have to get a building first, especially when you're starting.
I do think so as well. So
you have to get something tied down to sell.
Yeah, right. So
here's committed. Why would they?
Okay, so here's what we're going to conclude this meeting here in a couple of minutes. So here's what I would like to suggest. Okay, Number one, Rick, see if you could find another building super cheap to buy within a reasonable distance of Ovana Crescent, okay? Which we could turn, it has to be industrial, that we could turn into a bunch of makerspaces. Makerspaces is just the modern word for workshop. The young people call them makerspaces, Sean.
Would there be little apartments in there too?
No, they won't allow. I would put apartments in there in a second, but the zoning probably won't permit it. All right. Okay. So what I'm thinking is the residential would cover off with Ovana Crescent. We've got, how many units are there for $6 million? How many?
32.
32. 39. Is it?
32.
32. Yeah. Okay.
So we've got the 32 units. There's going to be some turnover, Sean. So yeah. You'll have, hopefully you'll have within the first year or two, you'll have, 10 or 15 or 20% of the turnover. So if you had 20% turnover in a year, you'd have 6 units, I guess, 6 units, which you could put into the medium-term rental market, and we could, start to raise the cap rate. And by the way, you're never going, I should have said this, you're never going to turn all 32 units into the medium-term rental market. That's stupid. Because the long-term rental market gives you committed monthly recurring revenues and not very much work. So probably the perfect ratio would be 2/3 in the long-term rental market and 1/3 in the medium-term rental market. You're never going to turn this into a building where you've got 100% short-term or medium-term rentals. It's way too much work, and the revenues are too unpredictable. That investors don't like that.
Yeah.
Right. So committed monthly recurring revenues, long-term rental, 20 units, 21, 22 units, medium-term rentals, 5 or 6, 7, 8, 9, 10, and we'll experiment. Maybe we put them, we have this industrial building and we have the medium-term rentals, and we find that the optimal market is only 4 or 5 of these units and 4 or 5 workshops, and we're good.
Okay.
We don't know the answer to that.
Selling some, selling some, Bruce?
Beg pardon?
Do we consider selling some, given it's a condo?
No, I think owning the entire building is crucial.
Okay.
Okay. There's one more thing that you guys would have to do, and that is a core competency here is property management.
Okay.
And either you're going to find a very good property manager, somebody like Dan Dore, or you're going to do it yourself. And that is something that, Sean, you and Rick need to talk about and let me know. I don't want you to talk
Well, let me
about
say, I like the idea, but not that I don't want to be involved, but I like the idea of being big enough that we can hire a property management team that
Yeah,
specializes.
well, Dan Dore is a wonderful person I coach. I trust him. Rick knows him well. But I'd like you guys to discuss that.
Yeah,
Well, all right, you guys discuss it. But it's a core competency.
Yeah.
And if you decide you're going to do it yourself, I have a proper property management course you need to take.
Okay.
Because there's some secrets to proper leasing and proper property management that you need to know. Because it's not as easy as you think. And I'll teach you things.
I think I would like to take the course. I'm not necessarily sure that's where my skill set's going to be.
I'm not saying you should do it or shouldn't do it. You, Rick, need to have that discussion.
Yeah.
So I got to get going here, guys.
Yeah,
So,
no worries.
but I need you to get back to me. So what I would like Rick to do, and you, Sean, is look for an industrial building somewhere very close that we could buy. So what we're doing is we're doing two things. We're averaging down our costs by buying a super cheap building, right? This one's a little expensive. This one's cheap. And we'll average down our cost. And then we'll raise our revenues through this animation process, right? So we've averaged down our costs and we've increased our revenues with this strategy. So that's the model.
Okay.
And so find that building. And then what we'll do is, Rick, you and Sean will prepare an agreement of purchase and sale for each of those buildings. And the key to making this work, Rick, in my opinion, would be to make an offer on the buildings that includes some form of seller take-back mortgage. I think you should assume that you're only going to get 65% loan-to-value mortgage on this property. It's not going to be 80%, boys.
No,
It just isn't. It's, you know, I talked to a very, very, very senior person at Scotiabank 3 weeks ago, and she told me that the Canadian banks, if they're able to, will not provide any additional credit to Canadians this year at all. If you want a $10,000 increase in your line of credit, let me think about that for a minute. No.
Okay.
You know, you want you know, an increase in your mortgage for your nice house in Arlington Woods. Let me think about that for a minute. No.
I'm gonna have to send them some brucelets.
It just, she said, but we won't say that publicly. You know, what they'll say publicly is, oh, absolutely, we'll consider everything on its merits. And then nothing will have any merit, right? So 65% loan to value, which means that we need a 20% seller take back mortgage, Rick. Because the key to this is going to be to raise the cap rate from 5.2% to hopefully 7 or 8% with some of these ideas that we've talked about today. And that 2 or 3 years from now, we can refinance this. But we got to have 2 or 3 years. So we need a 20% seller take back mortgage. And if they say, no, this project is dead, you cannot go to investors today and say, I want 35% of this financed by you. So we need 65% from a mortgage, we need 20% from the seller, and we need 15% from investors. So we need 15%, which is still a lot of money. 15% of $6 million is 900, isn't that $900,000, Rick?
Yep.
Yeah, we need $900,000 from investors, plus closing costs, plus maybe another $100,000 for, you know, for this shitty industrial building that we hope to find, plus another $200,000 in equity so we can renovate the damn thing. And we need at least another $100,000 or $150,000 in working capital so we don't go broke while we're trying to get this thing all, you know. So we probably need $1.5 million of investor capital to make this thing work. But if we could get our cap rate up to 7, 8 or 9%, maybe 10 or 11 if we're lucky, but 7 or 8 or 9, investors will be interested in that, and we will prove the model. Once we've proven the model, you two guys can go shopping in Florida, shopping in Delaware, shopping in Montana, shopping in small towns across Canada and the United States, and do this, 100 times. And then your $100 million won't take very long, Sean.
That's the thing about the market now. It doesn't take long.
No, it doesn't. It doesn't. But this one will be a $6 or $7 million thing, and if we can do it right and animate it properly and get the right kind of valuation in 3 years, we can make this worth $8 or $9 million. It's not going to double in value, but it could be worth $8 or $9 million once we finish with it, and then we can get a reasonable mortgage 3 years from now. So we need a seller take back at 3.5% for 3 years. To make it work.
Okay.
All right. So that's what we're going to do. Does that make any sense?
Yes, sir.
Yeah. And then just send me a note on how Sean makes money in this. And I know you have to go.
You wanted that. No,
Hold on a second. Hold on. We haven't even talked about that. That's a whole other discussion. You, as the entrepreneur, are going to get at least 30%, if not 50% of this building in exchange for your sweat equity and $5,000.
Okay.
Right? I mean, I'm going to ask you to put in, we're going to do a Mad River financing.
Yep.
So that's very simple. It means that Sean, say, puts in
the same model that you just sent me.
I know, but since you asked,
yeah,
you put in $5,000. The investor puts in investor group puts in $5,000. You own 50%. They own 50%.
Okay.
The rest of the money, $1.49 million, comes in as a second or even a third mortgage.
Okay.
Okay. So you'll own, I hope, 50% of this. Yeah, 50% is the upper end, and 30% would be the lower end. But I think we can get you 50% ownership, and the investors will own the other 50%. So there won't be much equity in the deal. It'll be $10,000. Now, the one thing we will put in to protect the investors, Sean, just so you know,
the second mortgage piece.
It might be a third mortgage, but that third mortgage will have foreclosure provisions in it, as well as power of sale. So that if you and Rick and me, and we do a shitty job, the investors, the rich dudes, they can kick us out, and they own 100% of it. So if we screw it up, you will own 0% of this building. But the ways you can get paid is two ways. One, you would own 50% of the building, and 2 or 30%, but I think 50 is reasonable. And two, property management, the way I do it, is very profitable. Okay, and I can teach you that.
Okay.
So one other thing, Sean, you promised me $350 plus HST.
Yes, sir.
Can you e-transfer that to me?
I can. Were you going to send me an invoice or no invoice?
Well, I'll send you an invoice, but I won't do that until the weekend. But you can send me my $350 plus HST, okay?
Oh, absolutely. Yeah,
but I will absolutely send you an invoice.
Yeah, no problem. Sorry, I was going to say that's no problem. My pleasure on that.
10 minutes, Sean. We can do another call.
Yeah, you guys can talk without me. But one more thing, Sean. The other thing that I want out of this is, if you're going to do it, is I want a coaching contract out of you.
Yeah.
Okay. So I would want to be paid.
I like that.
Yeah, I think I would help you. So you promised me $350 plus HST. Send me that.
Yeah.
But if you're going to actually do this, I normally charge $1,500 plus HST for my coaching now. But since COVID-19 hit, I reduced it to $850 plus HST. So I will coach you for $850 plus HST for 6 months. Okay? But you haven't made a commitment to that. But if you want me involved, that's what I'm going to do. Okay. And if you're happy with today, you guys go and do it on your own.
Yep.
Bless you. Okay?
Perfect.
All right. See you guys.
Hey, Bruce, just use the same email.
Yeah, bruce.firestone@century21.ca. One more thing. I will download this now to my computer, upload it to YouTube. And what would really help me and you guys would be for you to go through this, either Rick or Sean or you together, go through this and pick out all the aspects of the business model that I've described. Because otherwise I have to do that. I mean, if I'm coaching you, we need that to build the investor deck.
I missed it, Bruce. Pick out
So I need you to, I'll send you the recording. I need you to go through this video one more time and pick out all of the animation ideas and all of the business model that I've talked about. And just, again, just type it up as a list. That's all.
Okay.
If you hire me as your coach, I will do the slide deck and I will do the investor presentations. You guys will line up the investors. We'll do a webinar like this, a Zoom meeting like this. We'll record it and we'll pitch investor after investor until we get $1.5 million in capital.
Gotcha.
Okay, guys?
Yes, sir.
All right, be good.
Okay.
Do you have time for a call or another call?
Are you talking to me, Rick?
Yeah.
Yeah, sure. I have to be on a call in 10 minutes.
All right, so I'll let you guys talk. See
Oh,
y'all.
we can talk right here. Okay, perfect.
Hold on, let me fill up the screen here.
Oh, hang on a second. You want to talk on here? Okay, you can. What? But I don't think so. You guys should have.
No, I'm going to do my own here.